Hi and welcome to the Market Alert for Wednesday, the 8th of March 2023. So risk assets were pressured and the dollar surged after Powell's hawkish comments yesterday. And they were these. We've got Fed Jerome Powell opens the door to fast interest rate hike. So he's actually caught on to the fact that we've had a lot of inflationary data over the last few weeks. Also, this didn't help that Congress needs to raise the debt ceiling once more. No surprise there either, they do it every year. So that'll take us to 32 trillion debt now in the US. The other news, dollar flies, stocks dive, and Powell puts 50 basis points and higher terminal in place. So we've gone from the pivot pre-Christmas to now going back to 50 basis point rate rises because inflation is not going down. As I said from the outset, if the interest rates aren't higher than the inflation rate, how on earth can it actually slow? That's what it's always been in history, and no doubt that's what it's going to have to be in order to stop this continuing rise in prices. And again, in the UK, they're living in cloud cuckoo because this article here, I noticed yesterday, cost of living, 1 in 7 people skipping meals as prices soar to stupid levels. The latest findings from which Consumer Insight Tracker have found an alarming number of households are going without food and sitting in cold homes as rising inflation, high energy bills puts pressure on incomes, and interest rates are still down at these stupid low levels for the Bank of England as well. So there's no chance of the inflation disappearing because they're damned if they do and damned if they don't now. So they've certainly painted themselves into a corner when it comes to this raising rates situation. So we'll just have to wait and see. Today's economic news, 5 a.m. No, we haven't. That's the wrong time. So let me just refresh this for you. So 10 a.m. ECB and 1:15 ADP, the precursor to the non-farm payrolls for Friday. So watch these numbers at 1:15. Powell's out again today. It's a 2-day event. I think he's done most of the damage yesterday. You never know, you might see the markets reverse today. And 6:01, we've got a bond auction, which is neither here nor there. So that's your news for today. Right, let's move on. Have a look at the markets. Kick off with the Dow, see what it did during yesterday, along with all of the others, of course. And in the Dow, yesterday the market retracing sharply there. Let me just have a look, see how far back it's come from this low to here. We're back to 62%, and in between that and the 78. So still some potential weakness there for the downside. We could go back down and retest the 89, but a big move to the downside yesterday for the Dow there. Let's have a look in the 30 minutes. You can see as soon as Powell mentioned about having to continue to increase rates and going back to 50 basis points instead of the 25 that he did in January or the 1st of February, it was somewhere around there. He's got to up the ante to get on top of inflation. So the market selling off yesterday from the open, and the whole move yesterday was down to the close, 620 point range for the Dow. So volatility certainly has returned. In the German DAX, down yesterday off those highs. The market putting in a new high yesterday morning, though, taking the opportunity to move the market to the upside. We actually got to 15,707, and then you'll see the market down and just below the 5-bar moving average, but trying to come back above yesterday's low at the moment. If you look at the 30-minute chart, you'll see there that currently we're sitting at yesterday's low. We bounced off this a few times, and we're sitting there as well at the moment. So you never know, we may get a rebound. So often is the case because they send the markets to the downside. Everybody thinks it's going to go short. The next day they get in, go short, and then the market goes up in the opposite direction. Yesterday's range to the downside, up to the top to bottom, was 194 for the German DAX there. And in the 5-minute chart, let's just have a quick look at this. Overnight, you'll see they can see in a bit more detail now that we're sitting on this low of yesterday. It's coming back to have another look at it now. Market doesn't open for another 20 plus minutes whilst recording this video. So yesterday we saw the market moving up, and then we had a bit of divergence as indicated here in the market, momentum dropping off. They managed to bring it up after it was oversold back to 89, and then it tread water until we saw the market move sharply lower in the news from Powell, bounce back, and then continued lower overnight there. So German DAX sitting at the lows at the moment, trying to bounce off these levels. The week so far, 375, 383 on the profit factor, and win-loss ratio is 50-50 because of the choppiness of Monday and Tuesday. But nonetheless, yesterday the market paid back handsomely. Sometimes you're just better off standing aside. As you can see, it's up and down. The equity goes up and down. It's no great deal because I always keep the losses small. And then when it goes in my favour, I'll just ride it, and that's when you get the difference. So I'm not bothered about losses as long as they're small ones. It's a probabilities game. And in the S&P, also making its way down to 62% retracement there. 30-minute chart, we see this falling out of bed. We're back below the 4,000 level as well, the psychological level, which is this red line here. And again, we're just above the low of yesterday, trying to get our way back to that psychological 4,000. The FTSE 100 down yesterday, stuck in a sideways range there, but finding support already at 62%. On the downside there. So the FTSE picking up a bit of support. In the 30-minute chart, again, like we saw on Monday, Tuesday, the market trading up to the previous day high, getting slammed to the downside, and then retracement overnight, and again managing to stay off yesterday's low at the moment. GBP JPY finding support at the 20 and 50 bar moving average up on the overnight. Yesterday, a bit of volatility, of course, the market down, trading sideways, waiting for Powell, didn't disappoint, market down, and the market now moving back up to the DP for the GBP JPY. Let's just go back to the daily chart, stuck in that sideways range, trying to move higher, but constantly being pressurized there on the downside. In the pound, monkey hammered down yesterday as the dollar moved higher. We'll look at that in just a moment. 118.04 is the support there. Currently trading at 118.26. So the market needs to try and get back. And again, we're setting it at yesterday's low. This will require dollar weakness to move back up. But again, you can see a good move to the downside yesterday. The full range for the pound yesterday was, here we go, 243 points there for the pound on the downside. In the monthly chart of the pound, you can see there that we're coming off that sideways strength that we've had for a while after Truss went, and now there's the potential for further weakness. In the pound there, down to 116 would be the first target. And in the US dollar 30-minute chart, you can see what happened yesterday. The market spiking to the upside, and of course if the dollar's moving up, the metals are getting crushed, and crushed they certainly did yesterday. The banks took advantage of being able to slam the silver price hugely, which we'll look at in just a second. There you can see coming off the 20 bar moving average, big move to the upside. Not seen that since beginning of Feb, when I think this is when Powell raised rates as well, if I recall. And overnight bit of strength there as well at the moment. And in the metals, silver absolutely monkey hammered yesterday. But as I said in the market alert last week, we're going back down to these lows anyway. $18 is where we're going to. They're going to take advantage of this whilst they can. 30-minute chart just absolutely pummeled. As you can see, they're trying to get back above the low. The only market on the overnight that is already below the previous day's low. So this is going to be a resistance for this market, and expect lower prices. Gold the same, but not as much. If we go back to the silver one, you can see that we went straight through the low. But in the gold market, we're at 89, And that will be borne out in a moment when we look at the gold-silver ratio. So gold hammered down as well. You can see the big move to the downside. This too stuck at the low as resistance at the moment, also below this on the overnight. And finally, in the gold-silver ratio, as I said earlier, we were going back to 90. Looked at that last week, and sure enough, we're already there. I expect this to go higher. Like I say, the crushing of the silver price is not over, as the Bank of America short continues to put pressure on the market at any opportunity. They need the reason to do it. The reason, obviously, was the dollar moving higher. It's inversely related, I understand that, but it's the actual amount of velocity that is put into the selling in silver compared to gold, where it's absolutely crushed there. Okay, that will do it for this one. If there is anything to report, I'll let you know, but keep in mind, Powell speaking again. I don't think it will be as devastating today. He's got it off his chest that he's going to continue to raise rates. Okay, that's it for me. As ever, thanks for watching. See you in the